Krishna, thanks so much for joining in. Morning. What is it that you're expecting from Pharma for the fourth quarter performance? And do you think numbers will point to a recovery finally?
Yeah, we are expecting a big performance in Sun Pharma's during this quarter, primarily on account of the one-time sales and profit loss because of the transition of its distribution business from Aditya Medicines to Sun Pharma's wholly owned subsidiary called Sun Pharma Distribution. Overall, we are expecting sales decline of around 6% YY and 15% QOQ decline. In India business, we are factoring around 900 crores of sales loss, and which leads to around 46% QOQ decline. Is primarily because of this of distribution business. On the US front, we are expecting a revenue of around $371 million, which is flat YY kind of growth, flat YY growth, and marginal increase in sequential growth because of the revenue contribution from the specialty business. On the ROW business, we are expecting strong numbers because of the recent acquisition of Pola Pharma in Japan. We expect around $25 million of revenue contribution to its ROW business. Rest geographies, we are expecting flattish kind of sequential growth. On the margin side, we are expecting 17% EBITDA margin versus the recent run rate of 23-24% EBITDA margin is primarily because of this distribution transition one-time sales loss, as well as the increase in employee expenses, as well as the increase in other operating expenses led by this specialty launches in the US. A company is going to launch the Sequia in the US, as well as they have launched the Illumia in US. Now, on the PAT front, we are expecting around 62% decline is because of the lower revenue as well as the weak operating performance and the positive tax write back in the fourth quarter of last year. During this, if you exclude this one-time things, then the sales we are expecting the sales growth of around 7% YY. EBITDA 4% YY, and the EBITDA margin of 23%.
Sure. What's the guidance that you expect from Sun Pharma as well? I mean, the last 2 years they've actually been missing it. Do you think that they're going to be conservative this time around?
Yeah, we are expecting 12 to 13% sales guidance, but considering this the recent acquisition in Japan, we are expecting the guidance could be around 15-16% if we include this acquisition. Otherwise, 12 to 13% kind of guidance we are expecting. And more on that, the key things to watch during this quarter is the overall update on the ramp up in the specialty business, as well as the update on R&D expenses, outlook on India and US business.
Right. Okay. What about Lupin then? And what is it that you're making of the Goa facility now that it's been classified as an OAI? Do you think the markets, or rather, what do you think the markets will make of this?
Lupin, already the Goa facility is already on warning letter. So, but management has indicated in the past that they are going to clear the Goa plant in the first, before the other plant. But considering this already warning letter, we don't expect any impact. However, there will be a delay in product launches. And anyways, we have already factored the delayed product launches in the US, and we have the reduced rating on the Lupin front. So it was a kind of surprise considering the OI status to his plant, and also recently we have seen the OI status to his couple of plant like Pithampur Unit 1, Somerset, this OI status. So that will impact the overall profitability on Lupin side, as well as delay in product launches in the US.
Sure. Okay, let's talk about Aurobindo now. What's your expectation there? Will they continue to deliver strong results? What are you going to be watching out for as well in terms of their FY20 outlook?
Yeah, we expecting the strong YY performance for Aurobindo during this quarter. Overall sales expectation is 26% YY growth, primarily on account of the US business, We are expecting US to grow around 24% YOY because of the ramp up in the existing product portfolio, as well as ramp up in the injectable business, as well as revenue contribution from the Itapinam and the lower base in the fourth quarter of last year. On the other business segment, we are expecting 14% growth in the API business, as well as 10% growth in the European business. On the margin side, we are expecting flattish kind of margin, which is 20%. But because of the higher R&D as well as the increased price competition in the US, which restrict the overall improvement in the EBITDA margin. And on the PAT side, on the EBITDA side, we are expecting 28% growth and PAT growth of around 23%. So recently, the company has received the US FDA inspection status of OI to its unit 3 units of API, which we need to we need to know from the management the status on this plant, the nature of observations, and whether this will lead to overall decline in the business basically.
Thanks so much for joining us and taking us through the expectations, Krishnanath, on some of those pharma names.